It's early October 2020. Brandon, we're here from Verity Real Estate. Got my business partner Christian Matthews with us, and of course Jason Lang, mortgage broker and owner of Outline Financial. Gentlemen, thank you very much for being here today. Really appreciate your time as always. Everybody's well?
We're good.
We're good.
So Christian's coughing and covering up. Maybe I should allow Jay to drop a little.
Oh no, this is terrible.
A little goal. Come on, give me those. I mean, we have to make light of the situation.
Just a bad joke. I mean, given COVID, I sort of miss the day when you cover up your fart with a cough. Nowadays, people are actually covering up their cough with a fart.
Boom.
Yeah, terrible. Sorry about that.
Oh. I love it. I love it. So I've been criticized, constructive criticism about rambling on too much. So let's talk about what we're going to cover today. Really what we're going to do, the $1 million question or the multi-million-dollar question, is now the time to buy or should I wait if I'm buying downtown Toronto real estate? We're going to talk about the GTA market stats. We're going to talk about the average price increases. We're going to talk sales activity, new and active listings. We're going to discuss months of inventory, the rental market. Christian's going to touch on the East End. We're going to finish off with what does the future hold? What are we seeing? What are we anticipating? And wrap it up from there. So why don't we jump right into things, share our market stats. Let me just pull it up here and dive right into things. If I can, of course, now find those market stats. Where are we? Here we go. Awesome. So if you were to take a look at the GTA TREB housing stats, they would show a market that, actually, maybe I should take a step back. This is the area that we're going to focus in on today. We're talking central districts, a little bit of the East End, Leslieville, Riverside, the Beach, East York, over into Roncy, Hyde Park, New Toronto, and of course, the downtown core. But if we were to talk about the Market Watch, what the Toronto Real Estate Board produces every single month, it's very, very helpful. It's great, full of helpful information, as I said. It shows a very contradictory, a very confusing market, because what you're seeing here is that we know the economic indicators, GDP growth is down. We know that unemployment is up. We know that inflation is holding steady. Jay, you're going to comment a little bit later on how low interest rates are for people who are getting mortgages, which I guess if that's a silver lining of the pandemic, I don't even think we can call it that, but rates are very, very low. But this is the biggie over here that I think people find confusing. Looking at these market stats on the bottom right-hand side that cover the entire GTA, we're seeing sales activity that's up 42% over September of last year. We're seeing new listings at increasing 30% over this time last year. Active listings up about 5%. Average price up 14%, and days on market is down. So sales outpacing new and active listings. Average home price up. Days on market down. Everybody would assume market's red hot, but I think I'm experiencing somewhat of two very different markets in the downtown core, and even that I'm starting to see shift. Christian, I'm assuming you're seeing much the same.
Yeah, I'm seeing in the freehold market, I definitely seeing a slowdown over the past probably 2-3 weeks. I have a couple properties above 1.8, and activity has been very slow over the past 2-3 weeks, and I've been talking to colleagues, and I'm hearing the same type of thing. And the condo market, it's extremely slow. I mean, I'm seeing things just sitting there. I'm seeing a lot of price changes, reductions. So I'm seeing things definitely slow down, but much more in the condo sector, which I'm sure we'll get into in a little bit.
Yeah, we are going to jump into that. And Jay, I'll allow you to chime in a little bit in just a minute about the mortgage market. Because, well, actually, maybe I'll ask you right now, are you busy on the mortgage side? Your company, are you guys busy?
We've been very busy. I mean, you have the kind of the outer 416-905 that has been, going gangbusters, essentially. I mean, you're starting to see the core creep out, maybe the slowdown kind of starting from the core, now creeping out. And then we also have people looking to refinance at these, sub 2% rates. I mean, I think everyone's getting sick of hearing it, but no matter what you're looking at, you're below or sometimes well below that 2% mark.
Yeah. I mean, again, which is great if you're refinancing, but let's not sugarcoat the economic fundamentals. There are a lot of people that are struggling. So let's skip into the average sales price growth over the last year. And I don't think it's, well, I think it's somewhat of a surprise when I pull up this first chart here that shows across all housing types, despite what we just said, average home prices, detached semis, townhouses, condos are up anywhere from 6 to 14% over this time last year. And the biggie for me too is the 5 and the 10-year average, that even these are up anywhere from 7 to 10%. So everybody has done well. And even looking back over the last year, based on the overall stats, you're seeing continued price appreciation. But if I skip quickly into the rolling, the 12-month average, where we try to smooth out some of those seasonal fluctuations and dig a little bit deeper into the specific numbers, we're still seeing very solid price appreciation over the last year. Now, I want to jump in here and say that I think a lot of this had to do with September through February of last year, like September 2019 through, let's call it February and March of 2020. The last 6 months, we've seen, again, still seeing growth, but I think there's different sectors are showing different amounts of growth. Would you both agree with that?
Yeah, absolutely.
Yeah.
And I think there, if you're just looking at the rolling 12, you could see over the past 5 years, condos has sort of taken the lead in terms of appreciation. I'm just looking at the 5 year. Yeah. 10.2. But now, given COVID, people are looking for more space, and it's almost flipped, where now you're starting to see the condo, smaller units slow down, where some of the detached, more square foot is picking up.
Well, thanks, Jay. That's a great segue into the next couple of charts. So we'll talk about, I want to come back to this. Actually, let's talk about the pricing really quickly, and then let's talk about the shift in the demand for different types of housing. Because if we look at this graph that shows the last 10 years of average home price growth, seasonal fluctuations aside, we're seeing, again, your detached, your semis, and your townhouses, generally speaking, all above the average, or the 12-month rolling average. I was surprised, and this is why I put interesting on my notes here, to see that the condo sector continues to kind of hold and actually increased just a hint last month, which was somewhat surprising, but again, I think speaks to the type of homes that are selling. And this, of course, also ties into job losses and other things that we're going to talk a little bit later on after. But overall, I thought that in the downtown core, this was a very interesting trend, because the truth is I was expecting this number to start coming down at this point. So let's talk about why that might be. So I'm just going to try and move something here out of my screen, because it's a little bit in my way. So when I talk about the number of sales, looking at the number of sales over September of 2019, detached home sales up, all housing types. Again, statistically, you'd say, this is great. All sales for all types of homes have increased. And even over the last 5 and 10 years, we're seeing above average sales activity. But when we start digging into these, it's kind of like, why? So if we look at the detached home sales activity, we had the lockdown here in April. Since then, we've got buyers who are probably looking for more space. Jay, you talked about this. I would agree with your statement. Christian, I think you're seeing much the same, given how much business you do in Leslieville, Riverside, Riverdale, East York, and the downtown core. People who are still employed are concerned. My clients are concerned about another lockdown, which we've been talking about for months. This new working from home, and whether it continues indefinitely or there's some combination of it, people realize that I need more space at home. So what I'm looking at here is lockdown, the pent-up demand, the desire for more space. Sales activity for detached homes is much higher than the 1, 5, and 10-year average. Same thing for semis. If we look here, again, working from home, is that part of the reason why? Townhouses, again, just a larger option. And Jay, you even said that in the 905 region in the suburbs, you're seeing prices jump so much that it reminds me of 2017, when people would say, if I'm going to go to Newmarket and spend $800 to $1 million, I might as well consider what my options are downtown, which might be part of the reason why we're seeing townhouses, that segment of the market, continuing to drive forward at above average sales activity, because people I'm speculating, but my clients I don't want to move outside of the city because I'm still going to work downtown at some point. And frankly, I like the lifestyle, and I hope that in 6 or 12 months, there will be some return to normal. But this is the biggie for me here. Sales activity For condos, we were locked down. Since then, we've increased definitely, but we're not drastically above the 1, 5, and 10-year average. So it will be interesting to see how this continues moving forward, because there are a lot of things that we're heading into now. You know, we know we're into more lockdowns. We're in one right now. I think case counts are continuing to go up. People are concerned, not wanting to get out as much. So this leads me to new listings and active listings. New listings are great, but at the end of every month, I want to know how many active listings, how many listings are left over, how many didn't sell. So looking at this here, new listings across all housing types were up. And of course, the biggie here, no surprise, gentlemen, condos up 128% over this time last year. And again, over the 5 and 10-year average, big increases, big. Christian, I think you're seeing that too, even in Leslieville.
Yeah, I'm seeing a huge jump. I'm seeing buildings that would maybe have, you know, a couple listings. They're at, you know, 7, 8, 9, and they're just sitting there. And I'm seeing them drop their price because there's so much competition, which they're not used to in the east side, because we have a lot less density as compared to the core and the west side. But I'm seeing the inventory creep up every single week.
I'll just make a comment there just to give perspective on all of Treb. I forget the exact number, but it was around, call it 6,200 condos were released. So new listings for condos during September. That was only the third time it's ever been over 5,000. The other times were August, July that we just passed. They were both over 5,000. And the only other previous was May 2017 when it was just over 5,000. And that was right after the Fair Housing Plan announcement.
I was just about to say, because I remember a few places that I sold right at the end of April, and it was perfect timing if you wanted to reflect back on that. So speaking of active listings and what remains at the end of every month, because for me, this is the most important variable when I'm considering what is the future hold. So what I've scribbled on here for anybody that can make sense of my chicken scratches, sales activity is in red, and the percentage change of active listings is right next to it. So if sales activity is outpacing the number of new or active, in this case, active listings, then you would assume that prices are going to hold steady or increase. But if we're seeing a huge increase in supply and not the same sort of increase in sales demand, then you're going to probably see prices level off and in some cases dip. So looking at this here, detached sales activity greater than supply. We're actually a little bit lower here for semis, but still not terribly far off. In 1 month of this or 2 months, I'm not too concerned just because there isn't a lot of supply. Townhouses, a significant difference. And of course, the biggie is the condo sector. 13% increase in sales activity, but 183% increase in active listings. 3,600 condos available for sale at the end of the month in comparison to 1,290 at this time last year. That's huge. And that is the big reason, in my opinion, that you're seeing some of those price corrections that Christian made reference to.
Yeah.
I'm not really sure what, so Christian, you were just going to say something before I move on.
No, I was going to say, yeah, I like I mentioned before, I just think that even though the numbers don't show it here, even though it shows an increase in price in the condo sector, I think in the core, I think we're going to see that number really start to flatten out or possibly decrease in the coming weeks or months. I mean, we'll obviously talk about it the next month and the month after, but I'm just seeing that in the core, both, you know, and it includes the east and the west side, just that number keeps creeping up, and so much inventory, so much stuff to choose from for the condo sector.
And even just to put a comment in there about its comparables, right? So all it takes is a few people that have to sell. They take a little bit lower price, and then now that's a new comparable. And the same thing works with appraisers, you know, appraisals. If the market's declining, you want to hurry up and get your appraisal done sooner in a declining price market.
Couldn't agree more. So let's talk about what's lingering. I made a few notes here for anybody who's requesting our stats, which we're happy to talk about at any point in time. But let's talk months of inventory, because again, this is telling. And what I've put in here, this is generally, you can argue a half a month or so in either direction for what is a balance, what constitutes a balanced market. But if I were to draw a line up here, just saying this is where we need to be for a balanced market, what we're seeing here is a huge increase that we've been commenting on for 5-6 months in the condo market. And again, this 12-month rolling average, Jay referenced in the past, to move the needle that much, that quickly, takes a big, something big happening like a pandemic, or looking back over here in 2008, 2009, 2007, 2008, 2009, we had the credit crunch, or the credit crisis in the US. And the low-rise sector still remains low. What I said here by the difference, and what I find most interesting here, is the low-rise sector has kind of just held steady, and in some cases come down a touch, like the detached market, the months of inventory. Condo market continues to go up. So there are these two very different segments of the market. And what I referenced here by putting this difference note was that when the credit crunch really hit, all housing types spiked, right? So this also speaks to the desire for more space, the types of homes that are selling. Even within the condo sector, things that I'm selling and the demand is very different depending what price point you're looking at. So if I dig in, or if we dig in to this specific month, which tells you exactly where we are in terms of months of inventory, condos, we're in a balanced market, 4.33 months of inventory. All other housing types still very well below what would be deemed a balanced market. And I am not concerned, but I'm aware of this next slide, which is the completion schedule that we've talked about before. Gentlemen, anything you want to add before I start diving into my forecast of what the end of 2020 and early 2021 has for certain segments of the condo market?
Go for it, Jay.
Yeah, they're looking to me, I think.
Well,
yeah, Christian, go ahead.
I just think, I feel like I sound like a broken record here, but I just feel like, we're seeing the condo market, and that graph shows it earlier, that steep climb up and how fast things have to change in order for that graph to go up that quickly. And then you bring in the slide for the new developments coming to completion. And then you go into early 2021. Those are some big, big numbers. So that's why I think we're going to see, I think you guys probably agree, but I think we're going to see prices flatten out in the condo market and start to decrease. I'm seeing it now, as Jay mentioned. It takes a couple people to start to price decrease, and that becomes the new comp, and then things kind of, follow suit. So those numbers, those completions there, just kind of confirm what we've been saying for months, that the condo market is heading for a bit of a correction.
Yeah, I guess only comment that I would say would just about, it will take a lot for the condo market is very resilient in Toronto. It's a hub. If immigration comes back, it is resilient. So even if we go back and look at the past, even in 2012 to 2015, when we saw the inventory, so the months of inventory start to spike in the condo market, average prices were actually still going up. Over that period of time, 4 years, they were going up 3.2% on average. And that's just the core 416, so a little bit more broad. The only time we actually had it decrease was during the credit crisis. Over a span of about, I think it was about 6 or 7 months, we actually saw, a 7% decrease in the condo market. So it's, it will take, definitely prices anticipate will slow. It's just, it will take a lot to go negative. And unfortunately things are maybe, or fortunately if you're a buyer, things may be lining up to do just that.
I also think though that, Jay, when you talk about a correction of 7% back in 2008, 2009, I got to tell you, I think it depends on where you're referencing, because in the downtown core, there was literally a 3 or 4 month hiatus where nobody did anything. And I feel like we've been at this impasse point right now, which is at this exact moment in the last 2 months, sellers are looking back and saying, well, I don't want to sell for less than what my neighbor sold for 6 months ago. I don't have any comp that would tell me that the price is worth less than what they sold for generally. But buyers are sitting here saying, well, there's more inventory to choose from, so let's just wait. And so we're seeing this waiting, and what I'm seeing now is sellers who are willing to accept 2, 3, 4% less than what their neighbors sold for. Like, you know what, I've done very well. One of the first slides we talked about was that over the last year, we've seen like a 7% increase in the condo market. So if you were to take 3 or 4% less, you're not losing anything. You're losing some equity that you never had in your bank account. But based on when you bought 3, 5, 7 years ago, you've made so much money that even a small correction, which is what it is, really doesn't hurt your bottom line unless you've over leveraged yourself in other ways. So that's where I don't want to paint this picture that the Toronto real estate market is forever doomed, because I really don't feel like it is. One of the first questions I wanted to ask, which I'll get to at the last question, is now the time to buy? Like, what's your opinion? And I hope to help buyers that are out there look at these stats, and sellers, and make their own decisions of what they feel most comfortable with. But I do believe that what we're going through right now is not completely short-lived, but there are elements to this that could really speed up somewhat of a recovery and get back to this long-term housing shortage that Toronto could suffer from. So let's talk really quickly about, yes, the rental market, or sorry, the new construction market. We're going to see a lot more come to completion at the end of this year and early next year, which is going to contribute to the supply, which may put some temporary downward pressure on condo prices. They're not building a ton more houses, so I don't see much happening in that segment of the market. If we look at the rental market, we all know that rents are down. Urbanation, who we all subscribe to here, shared a number of slides recently where they were saying, I think it's 12.4 or 13.6%, depending which segment you're looking at, that the average condo in the downtown core has corrected since its peak, which actually preceded this pandemic. So all this correction in the rental market actually started before the pandemic ever did. The pandemic just made it worse. So we're seeing so many rentals available that, yes, prices have come down, and frankly, it's reprieve for a lot of renters, which I think is a good thing. It makes Toronto somewhat more affordable. And the other biggie is most of the landlords that I helped buy investment properties, they bought 3, 5, 6 years ago. They could drop their rents by $100, $200, $300 a month and still be making $100, $200, $300 a month of positive cash flow. So all of this does bode well for most renters. And I think we're going to see, I kind of feel like we're getting to the bottom of the rental market dip, because there is also talk of the international students coming back starting October the 20th, which might help. And then eventually, if we get a vaccine and we get that distributed, that if we turn that immigration tap back on and the government sticks to their quota or their goal of a certain number of newcomers to the country, we could see a huge surge and the absorption fairly quickly of this rental supply. So, Christian, I want to talk really quickly about where you do so much work, which is Leslieville, Riverside, Riverdale, because despite everything that's happening in the downtown core, I feel like this neighborhood throughout the entire pandemic has been red hot. So what are we seeing? Like, when I look at the east end of the city and I look at these average price growths and I look at the 12-month rolling average, are you seeing continued demand for the low rise and the condo sector in the east end?
I am seeing that. And as I mentioned before, obviously it comes down to density. We don't have much to choose from over here, so it helps in terms of what's available. But I do see these numbers. I mean, as you compare, July and August, I mean, these are creeping down a little bit in terms of, the year over year, the year over year from July and August and September, it's coming down a bit. So I don't see the craziness that we saw in July and August, but I do see there's still lots of demand here. Inventory is low for freehold properties. There's still multiple offers everywhere. So I'm still seeing a lot of demand. And I think, a lot of the buyers have the majority have bought their property. So that pool is getting smaller and smaller. I see listings, the amount of listings kind of slowing down a little bit.
Well, here's your listing in reference to what you're saying. So you're spot on. Detached listings are down. But semis, townhouses are up, and condos are up too. But everything, I think, is relative, because you made a comment at the very beginning, which was it's such a low density neighborhood to begin with that, yes, there are more condo listings, for instance, but you went from 30 to 54. It's not like you went from 30 to 300.
Yeah.
So yeah, there are more to choose from, but it's not a ridiculous amount.
Yeah, and on the condo side, we've been pretty resilient through this whole pandemic and the whole, since March. But I'm seeing listings just sitting there. We're experiencing the same thing as the core is experiencing. To give an example, there's a building here, 88 Colgate, for one bedroom came on the market. I mean, they held back offers. It would sell within a week. Right now, there's 7. There's 7 one bedrooms on the market, and they are sitting there, and they are starting to reduce their pricing because I know for a fact a couple of them have to sell. So it goes back to your earlier point, Brandon, about where you are. Like if you have to sell, I think you might reduce the price because you need to get out of that property if you've already bought something. If you don't, you might hold on to your pricing a little bit longer. But I'm seeing it on the ground where there's just so many listings coming out in each building where people are thinking about reducing price in order for them to sell because there's just too much competition around them. I mean, 7 one-bedrooms where I would see maybe 2 at most in the past 5-6 years. I mean, that just kind of shows you an example of how inventory is creeping up even here in the east side.
Well, I mean, because we don't have too much time left, what I do want to focus in on is, what we think the future holds. But as you just said, even though inventory has crept up, I think it's crept up from such low levels that anything that deviates from, a red hot market, people see as somewhat of a failure. So I know that even though you're talking about Colgate, and there's a lot more listings, I know that you still sold something in multiples, I believe, the other week. I am expecting, more inventory to come to market when Riverside Square registers in reference to the new construction segment. And I'm struggling with certain rental buildings right now. Like I've got a handful of properties that we've been renting out slowly at One Yorkville, but I mean, at one point, I think that there were 27 one-bedrooms that were for lease in that building alone in Yorkville. And we've reverted to 2017 rental rates right now. So I think the writing on the wall for me from a new construction perspective is if you're looking back and bought something 18 months ago and somebody promised you $6 or $7 a square foot, I think you might be surprised when their building comes to completion in 2 years. Because Jay's point about setting precedents, it's the same in the rental market. It is. Yeah. So let's finish off by digging in really quickly to Jay, interest rates. They're low. Are they going to stay low?
Yeah, I think the expectation is, and the Bank of Canada went so far to say they could even, negative interest rates would be in their toolkit. That's a whole nother discussion. But we're probably looking 2022, 2023 before we start to see any significant movement. I mean, we had some great job creation recently, but that seems like that maybe is going to be a blip, and it'll be much harder to keep going.
Mm-hmm. When we talk about the job losses, there was an article that came out recently where they said 80% of the job losses were in the low wage sector, which I'm assuming they were referencing to, unfortunately, like the frontline workers, those of us that have kept us going throughout this pandemic, which is just ridiculous. Not to mention hospitality, tourism, and some of those sectors, because when I look at the percentage of sales and all this contradictory information that comes out, really what I'm seeing is my clients who are still employed are actually purchasing larger condos, larger houses, keeping those average prices afloat. And it's the smaller units, the small one bedrooms, one in dens that have actually been suffering lately, because normally those fly off the shelf for great prices. But right now, people aren't clamoring to buy them. And more importantly, we don't have those people immigrating to the country and absorbing them as well. So there's this myriad of factors. Let me talk to you really quickly. Deferrals. What are you seeing there? The deferral program came to somewhat of an end at the end of October. Are they still lingering on? What's happening? A lot of people using it?
People, lenders are being, the ways they had to account for deferrals is no longer, but lenders don't want to foreclose on a property. So they are being flexible in terms of, amending amortization, or it's just have that discussion with them. The arrears rates just came out on September 29th. Still, like 0.25% of mortgages are more than 3 months overdue. So everything still looks pretty positive from that perspective. So we haven't seen that deferral cliff yet, but we'll definitely keep watching.
Yeah. Christian, if you had to buy right now, would you be buying? I mean, that's the $1 million question. What are you telling your clients?
Yeah, I think if my clients are buying a freehold, I think it's still a good time to buy. I think that if you find the right property, I would suggest, putting an offer in. I am seeing it slow down a bit. So if you wait a bit, I mean, it depends when you want to buy, you might see inventory kind of get low where there's not much to choose from. And who knows what happens if we get another lockdown or what happens at the beginning of next year. So I still think now is a good time to buy. In the condo market, I would say possibly wait a little bit, because if prices do correct a little bit, it could be a good time to buy if you're an investor in it or an end user. But I still say if the right condo is out there, if it's the right fit and it covers and checks all the boxes, definitely take a look at it and possibly put an offer on it.
Couldn't agree more with you there. I mean, I think for me, it's all about what's your time horizon. Because if you're trying to time the market, it's a very, very difficult thing to do. If you're looking at flipping, don't. I've been telling a lot of my condo buyers, if you're looking for something very specific in, desirable buildings, desirable neighborhoods, great layouts, there are only so many of those in the city at the best of times. So, be prepared that you're going to hold on to this property for 5, 6, 7 years, and this is going to be your home. Alternatively, you could take advantage of really low rental rates. But again, I do think that if you examine your horizon, and if you're not looking at flipping anytime soon, go for it. I think if you're looking to take advantage, be opportunistic, and just buy an investment property, I would probably tell you to wait another 30, 60 days. I think we're going to be into a buyer's market for certain housing types. But again, in the downtown core, Trinity Bellwoods, Roncy, High Park, the Beach, Leslieville, Upper Beach, like there's just such little supply that the demand is almost always there. And we're in somewhat of a second phase of a lockdown. And I think people are preparing themselves to spend a lot more time at home. And if they're still employed, they're taking that equity that they've made and moving into a bigger home. So I think we'll wrap it up there. This was great. A little more rapid fire. I don't know if we got through it as quickly as I was hoping. Jay, as always, thank you very, very much. Really appreciate your insight. And if anybody needs mortgage rates, information, refinancing, Outline Financial are definitely one of our go-to people. You guys are excellent. I can't say how great you and your team really is. And Christian, I think the next few months presents opportunity for different people. So I'm excited about next month and checking back in to see how things play out over the month of October.
Me too.
All right.
See you then.
Thanks, everyone.